Are you a wishful thinker wondering, यार काश 1 करोड़ की lottery लग जाए? Cause you're tired of thinking about your finances? Are you too looking for lotteries and jackpots to happen to you so that you won't have to think about a retirement plan? Then this video is a step to get back on such thoughts with some action called investment. If Mr. Warren Buffett has done it, so can you. When we say this is the video to get your 1,000 rupees turned into a crore or more, we mean business. This video attempts to give you a direction to such planning. It'll give you reasons to believe and have faith that even a small step of 1,000 rupees a month will lead you to the crore you may have dreamt of. The video will cover how money grows exponentially for entrepreneurs and investors alike, how equity is the way to create wealth over a period, how mutual funds and SIPs have become a simple tool to this end, and what character traits would you need to fulfill this goal. So let's get the learning boost you need to get your small amount of savings to turn into crores. Chapter 1. How are crorepatis or millionaires made? How do you get to become a crorepati or a millionaire? The riches that you seek can be one of 3 ways. First, you're born in it, that is, becoming rich by winning the birth lottery, as Mr. Buffett would say. Second is finding a new idea, invention, innovation that can be commercialized into a profitable business that generates value for its owner, that is you. The last is to cultivate in yourself an investment mindset that uses the above 2 people to help you get there. How? Let's explore. We've all heard about rags to riches stories at home and on social media, like how somebody found a once-in-a-generation idea and turned rich by capitalizing on it. Examples of entrepreneurs like Jeff Bezos or Elon Musk and Indians Ritesh Agarwal and Bansal brothers are thrown in for such stories. But that is not possible for all of us, right? What we need is to get there by partnering with such people through the means of equity or stock investments. It is said that if one were to invest 1 lakh rupees in Kotak Mahindra Bank at the time of its inception, today that stake would be well over 2,000 crore. But we're not here to talk about missed opportunities, but a systematic way of investment that delivers similar results, and that way is, yes, you guessed it right, SIP. If you're liking this video so far, drop a like and press the subscribe button for more such content. Chapter 2. SIPs. The journey from 1,000 to a crore. What is an SIP? SIP stands for Systematic Investment Plan, if you didn't know already. SIP has made stock investment for common folk really easy. You must have seen the mutual fund Sahi Hai ads on TV and the news. SIP is basically investment into mutual funds by the means of regular and systematic investment. If you're still unaware of mutual funds, they're large pools of money that collectively invest in various financial securities like shares and bonds. There are a few advantages to SIP that will help you turn thousands into crores. First is discipline. When you sign up for an SIP, you feel the pledge to invest the agreed amount, say 1,000 rupees every month. Second is the management of invested funds. You may not be skilled as an investor or not have adequate time to focus on that. Here, mutual fund SIPs solve your problem as the large pool allows for economies of scale. The fund houses can hire talented fund managers who can do these tasks for you. Mutual funds also allow investing in indices like Sensex and Nifty where no management is required, as the fund will go directly to the index stocks with the corresponding weightage. Index investing is a low-cost SIP due to this mechanism. Another advantage is rupee cost averaging. Your same amount of 1,000 rupee input will be able to buy more stocks when the market is going lower. This decreases risk and increases future returns. But our question stands. Can SIPs turn that 1,000 rupee regular investment into a crore or more? Let's get to some numbers. Open a good SIP calculator that allows fixing monthly input, time, and rate of growth. You will see that if one were to invest just 1,000 rupees every month for 33 years and the fund was to grow at 15%, the outcome would be 1.1 crore. A whopping crore plus amount from total investments of just about 4 lakh spread over 30 plus years. You might ask, what if I want to get there quicker? After all, 30 years is a long time. But you must understand, if you began investing at 21 years of age, you would reach a retirement age in 33 years. That is not a bad record. We see many who have failed to create a retirement corpus after toiling for 30 years, but a smart investor would have turned even 1,000 rupees a month into a crore in that time. But that does not mean one cannot reach there quicker. Just get a step-up option and increase your monthly investment every year. As your income increases every year, your investments keep pace. At just a 10% increment every year, the crore plus corpus can be reached in 28 years. That's about 5 years less than the previous calculation. While we are discussing numbers, let's not forget the rate of return. We've assumed a grand number of 15%, but is it really even possible? The answer is yes. The index Sensex itself has returned 16% compounded growth since inception. Just a little research would tell you that many mutual funds have beaten that number. This is not just numbers and theory. There are real examples. The Nippon India Growth Fund, which was called Reliance Growth Fund before, has achieved a much greater feat. This fund has provided over 22% CAGR returns for SIP since 1995. In 27 years, your monthly 1,000 rupee investment would turn to over 1 crore and 36 lakh by November 2022. That's the real deal. And there are many more funds that have beaten the Sensex. So the reality of turning 1,000 to a crore exists, but what does it take for you to get there? Chapter 3. What does it take? If it all seems so easy, then why do most of us fail to pull it off? The first and foremost is discipline. Investing regularly and uninterruptedly is the key to success. You cannot falter on your goals and commitments. You would have to have faith in your investments and keep putting in the work. Here it is important to remember the saving versus investing mindset. What we calculated for turning 1,000 to a crore was for equity investing. The stock market is full of ups and downs, and your investment too will follow. It is difficult to hold in such conditions. Switching to safer investments like fixed deposit and EPF will come to your mind seeing your holdings in red. That is the savings mindset of going a bit safer. But as we know, there's no return without some risk. Your investment mindset should persist, and you'll have to continue with discipline. Remember the example of Kotak Mahindra Bank we gave before? There, turning 1 lakh to 2,000 crore would need a strong will. The stock had lost over 85% from its recent peak, not once, but twice in the years 2000 and 2008. Now ask yourself, would you have been able to hold in those situations? That is why turning your investment into crores needs discipline and guts. Fortunately, SIPs are easier on the heart. Sure, there'll be ups and downs, but diversification into many holdings decreases the chances of sudden falls. So get down into the comments and tell us what you possess, the savings mindset or the investment mindset. For the investment mindset, you would have to cultivate faith. Not blind faith, but one based on knowledge. Keep learning about the markets, how to invest and where to invest. Keep checking on your investments and evaluate your decisions. You will also have to learn about taxation and your exit plans. After all, you'll have to pay taxes like capital gains on your investment when you withdraw. Therefore, your withdrawal plans of the crore or crores you made also matter. That is how you keep the most of what you made. This holistic development is what the investment mindset is. So keep up with what's happening in markets and how to invest with channels like Omega Finance. Chapter 4. The Indian Bull Run and what should you be doing? This brings us to the future. If you educate yourself in behavioral finance, you will learn about biases. One of these biases is the hindsight bias. It means taking what happened in the past as common sense, that you would have known before it happened. The Sensex delivered 16% returns and many mutual funds got even higher, but all of that is in hindsight. One could not have known that such numbers would become real. India in the late 1980s was in a nascent stage of growth. The Sensex had just begun and the financial system was a bit primitive. Sure, you could have made a lot of money in a short time, but you might also have lost most of it in scams like the Harshad Mehta scam or the scam 1992 as you know it. That is the power of hindsight, to know the past happened as it did. Mr. Warren Buffett says, hindsight is always 20/20. So what tells us that this will continue in the future? Will the India growth story continue galloping as it has? Well, no one can know for sure. What we can know is to estimate and then make our decisions. The growth of your funds is linked to the market returns. In turn, the market returns are linked to the business fundamentals. If the businesses earn, the stock will go up. Again, let's take the Kotak Mahindra Bank example. The growth of the share was magical, and so was the growth of the business. But that would not take any higher intelligence to estimate why. India lacked proper banking for most of its territory. As the banking sector was liberalized in 1991, private banks which were more efficient and hungry for business expanded fast, providing an essential service to Indians. This delivered profits, and that in turn led to stock returns. India has overtaken many global economies like the UK. It has shown more growth than the factory of the world that is China, and it keeps delivering. India still lacks many essential goods and services. The consumption of this is supposed to increase, so you can have a knowledge-based faith that your investments will perform. It is not just hindsight, but also the future. So start investing now. Educate yourself about what kinds of SIPs, funds, and investments there are. Find what suits you and go for it. So what did you learn? First, SIP is theoretically and practically the strongest option to turn 1,000 rupees of regular investment into a crore. Second, what you need to actually do is a little self-learning and a lot of discipline and willpower. Lastly, starting early is one of the most important aspects of success achieved by the modern-day financial tycoons. So press the like and subscribe button. As they say, actions speak louder than words. Let us know in the comment section what's your excuse for not investing. And to top it off, check out our video on the Psychology of Money book summary, where you get a real-life example of a rags-to-riches investor named Ronald Read. He was one such US-based investor who turned his small but regular investments into millions. To learn who he was and how he achieved that, go to the video.